Welcome back to the channel. This week, September 13th to September 19th, was one of the most exciting weeks for U.S. markets in 2025. We saw a historic Fed rate cut, tech stocks absolutely on fire, and record highs across major indexes. But not everything was green. Some sectors struggled, and risks are still lurking. So, let's break it all down, step by step. Let's start with the headline event. On September 18th, the Federal Reserve cut interest rates by 25 basis points. This was the first cut since late 2024. Why does this matter? Lower rates mean cheaper borrowing costs for businesses and consumers. That usually boosts economic growth, but it can also fuel inflation if the economy is already hot. Markets had been expecting the cut. But here's the twist. Even though the Fed eased, Treasury yields actually moved higher on the longer end. That tells us investors are still cautious about inflation sticking around. So, the Fed gave Wall Street what it wanted, but also left a big question. How many more cuts are coming in 2025? Now, how did the market react? The S&P 500, Nasdaq, and Dow Jones all surged to new record highs. The Nasdaq was the clear leader, fueled by technology and AI stocks. Even the Russell 2000s, which tracks smaller companies, had a powerful run. That's important because when small caps perform well, it often signals broader confidence in the economy. Not just in megacaps. Let's talk about the biggest winners. Intel absolutely exploded this week, jumping more than 20%. The reason? Nvidia announced a $5 billion investment into Intel. This deal shocked the market. For years, Intel was seen as lagging in the AI chip race, but now, with Nvidia's backing, investors see new life in the company. Apple also had a strong week with the launch of the iPhone 17. Not only did consumers respond positively, but analysts raised their demand forecasts. Apple shares climbed, adding billions to its market cap. Paramount and Skydance soared after reports of a potential partnership with Warner Bros. Discovery. Investors love the streaming war drama, and this move could shake up Hollywood. So overall, tech and media carried the market higher. But it wasn't all green arrows. Home builders and some consumer stocks struggled. Why? Rising long-term yields mean mortgage rates stay high, which pressures housing demand. Some earnings reports also disappointed, reminding investors that fundamentals still matter. So while the headlines scream record highs, there were losers beneath the surface. Another factor boosting sentiment: U.S.-China relations. This week, President Trump and President Xi had a phone call signaling progress on trade disputes and even the TikTok issue. Markets love any sign of easing tensions. It added fuel to an already bullish week. So what should investors watch next? Inflation data, especially the PCE report, will tell us if the Fed can keep cutting. Earnings season is approaching, and results will test whether valuations, especially in tech, are justified. And of course, global risks, trade policy, regulation on AI, and political uncertainty as we head into 2026. The takeaway: this week was historic, but volatility can return quickly. Enjoy the rally, but stay cautious. If you found this recap helpful, hit that like button, subscribe, and ring the bell so you don't miss next week's update. And in the comments, let me know. Which stock impressed you the most this week? Intel, Apple, or something else? See you in the next one.